This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news China is wrestling with how to respond to its slowdown, with the measures announced so far causing volatility. But first up today, and as expected, the American CPI inflation rate fell in September, but by less than expected. It came in at 2.4%, down from August 2.5%, but above the expected 2.3% rate. For 3 consecutive months, the month-on-month rise has been 0.2%, so it's tracking at the annual rate as well. Rents dipped to that 0.2% month-on-month rise, but from a year ago they remain 4.9% higher. But food prices are up 0.4% in September from August, the most in a year, even though the year-on-year change was only 2.3%, so one to watch. However, the overall inflation situation remains pretty benign. No one will be overly worried about this data, but it will reinforce to the Fed that outsized rate cuts at this time are probably not warranted. Initial US jobless claims, however, spiked sharply last week, coming in at 235,000 actual, more on a seasonally adjusted basis. There are now just 1.62 million people on these benefits and virtually no increase from the prior week. This spike probably has more to do with the Florida storm impacts and perhaps the Boeing strike than any meaningful slowdown in the US labour market. In China, money flows around their surging equity markets are creating issues for policymakers. Huge amounts have flowed out of wealth management products, chasing the expected equity market gains. But foreigners and some local professionals seem to have taken the opportunity to cash out in the rising market. And as the rises haven't been sustained, there may be a lot of very disappointed local speculator investors. But help may be on the way. The central bank yesterday announced the start of a key operation to prop up the stock market. That put a floor under the market, embedding the Beijing put. And all eyes will be on an announced weekend briefing by Beijing authorities on their next economic policy moves. The rise in Japanese producer prices in August matched the pace of the prior 4 months and again is embedded at about 2.5% annual rate. Again, little to worry policymakers here. And German retail sales unexpectedly rose in August for a second straight month to now be 2.1% higher than year-ago levels, something few saw coming. That is actually their best year-on-year growth since April 2022. Further, this is a real after-inflation result, so it's quite strong. Food and travel volumes rose the most. In Australia, it seems the stage is being set for a new federal election. One must be held before the end of September 2025 anyway, but it may well come earlier in 2025 now. And container shipping rates fell again last week to be down another 4% from the prior week, which takes them back to levels at the start of 2024. They are still elevated because they're 135% higher than pre-pandemic levels, and the reasons still relate to Middle East security pressures. But clearly the world and the industry are finding ways to adapt. All the current weaknesses are on outbound rates from China. Bulk cargo rates fell a sharpish 9% last week from the week before, so are now also 9% lower than the same time a year ago. But there is nothing special about these levels, which are similar to the long-run 35-year average. However, on an inflation-adjusted basis, they are remarkably low. It isn't great for ship owners. The US Treasury 10-year yield is now just on 4.10% and up another 3 basis points from yesterday. And the price of gold will start today at $2,621 an ounce and up $12 from yesterday. And oil prices are $3 higher, at just under $76 a barrel in the US, while the international Brent price is just over $79 a barrel. And the Kiwi dollar starts today at 60.8 US cents and up 20 basis points from yesterday. Against the Aussie, we're also up 20 basis points at 90.4 Australian cents. Against the euro, up 30 basis points at 55.7 euro cents. That all means our trade-weighted index starts today now at 69.1 and up 30 basis points from yesterday at this time. And the Bitcoin price starts today at $60,422 and down 2.2% from yesterday. Volatility over the past 24 hours has been modest, at just on plus or minus 1.3%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.